Hi everyone, let's have a look at my low time frame count and how it fits the medium time frame Elliott Wave scenarios that I have. So on the lower time frame, I'm looking at this to be an impulsive move after we had a corrective structure. So this impulsive move is then the first impulsive move, which then either is a wave C, a wave A, or a wave 1. So what I want to do with you is have a look at this structure and decide, is it the highest probability that this is a wave C, a wave A, or a wave 1. So let's start with figuring out, is this a wave C? So a wave C basically means that either it's an expanding flat, with this then being an A, B, and then the C wave is a 5-wave move, after which you then get a reversal to the upside, or we have a zigzag, which is a 5-3-5-wave move. Now, a zigzag is not possible in this scenario because this high over here took the previous high, and that is not allowed in a zigzag 5-3-5 structure. So in this case, it can't be a zigzag. So we have to look at an expanding flat, which then is an ABC. So could this be a potential expanding flat ABC? Well, let's have a look at the target, shall we? So if this actually, let's put it on the chart first so you know what I'm doing. This being an A, this being a B, and then we are looking for a C to the downside. Now pay attention, I do have at the moment a 1, 2, 3, 4, and still a move down for 5, but that has to do with the support area that we have on the medium time frame over here, just below where price is at the moment. But besides that, let's have a look, right? So we have an A, B, and we're looking for C in 5 waves. So wave B has certain targets. If I pull a fib from the origin of A to the low of A, and I put it on my wave B expanding flat targets and then draw these to the right side, you can see that wave B hit a rare target for an expanding flat, which is the 105 fib. Now, most commonly, a wave B in an expanding flat hits the 1.236 or the 1.38, or at least this area, but the 105 is a rare target. However, it is a target nonetheless, so it is possible to then, after the 105, have an impulsive move to the downside, which is going to end at targets far lower than the low of wave A, as that is the requirement. Like a wave C of an ABC expanding flat has to go below wave A. So let's have a look at the targets then for this wave C and see if it's actually working. So the first thing you can do is pull a fib from the low of A to the high of B. Then of course toggle on my wave B expanding flat targets, which is not this one, actually it's wave C, there we go, which is the 106 that you see. Now, as you can see, price has passed this target already. Okay, all good. However, I'm going to keep it on my chart because we're going to create an area of confluence now. So the trend-based fib extension tool, taken from the origin of A to the low of A to the high of B, put on these fibs over here, the wave C expanding flat fibs, and usually the most common target area for a wave C is in between the two 106s. So one is a Fibonacci pulled from A to B, and the other is the trend-based fib extension, which has this pull over here. And then between the 106, 108 is usually a very common target for a wave C. Now we had a little bit of a bounce over here, right? Bit of a wick, move to the upside, but eventually we went further to the downside. And then we still have one target remaining, which is a target that is not very clear on the chart. So let me make it a little bit brighter, which is the 2.618. So these are more common targets, but the 2.618 over here, which currently sits at 27.35K, is a rare target for a wave C. And it just so happens that this target of the 2.618 is, and now you see I did another pull, is right in between the target area that I'm looking for maybe a bounce on the medium time frame, where price could potentially go down in another wave 5 and then move to the upside, hitting the 2.618 for potentially an ending of a wave C. So this target is still in play for a potential ABC expanding flat, where this impulse over here is the end of a structure for then a move to the upside. Now then the scenario on the medium time frame that is basically fitting this scenario is the medium time frame preferred scenario I have at the moment. So where this is then an ABC to the downside, right? A 5-3-5 wave move, that is. And then inside this corrective structure, we have 5 waves in a wave A, then we have a corrective 3-wave pattern in a wave B, and then we expect an impulsive move to the upside in a wave C. Now this corrective pattern is important because this potential impulsive structure over here is part of this corrective structure in a WX and then an expanding flat wave Y, as I have it on my chart at the moment. A big zigzag in a W, then we have a double zigzag in a wave X and an expanding flat in a wave B, or in a wave Y, sorry, over here, for then eventually continuation to the upside. So this wave C in this scenario is the end, or this impulse is the end of a corrective structure, after which we then expect a move to the upside for this bigger wave C and then an A, B, C. Now the target area of this preferred scenario, as mentioned, is between the 786 and the 886, which includes the weekly over here, the wave C target, the 2.618. You also, of course, have the 886 and a triple bottom. So on Bybit, actually, this low over here of wave W went below the double bottom over here to grab liquidity. But as you can see on the Coinbase chart that I have over here, this wick did not take the liquidity of these lows. So now we have a triple bottom over here, which might lead to price going down, grab liquidity before a move to the upside. Now, of course, price can continue to the upside, right? It can move up. We have a clear invalidation over here at 28.8K, because usually if this is going to be a wave 4 in a 1, 2, 3, 4, 5, you don't want to see price going above the 105 usually. So really the invalidation normally is going to be above the 105 over here at 28.7K basically. But just to play it safe, I always put it a little bit higher, but a wave 5 down would be preferred for me. However, if price moves up, that's absolutely fine, of course. Now, okay, this now being a wave C, we spoke about that. Can this be a wave A? So if this is a wave A, we are still thinking about a corrective structure. So if this is a wave A, we're thinking about a wave A, then a wave B, and then a wave C. It has to be a zigzag structure, which is a 5-3-5 wave move in this particular scenario. Now, if this is a wave A, it means we're still going to be corrective. So basically from the low that has been made over here, we're going to have a very long corrective structure. Now, in this particular scenario, that also means that this has to be the start of something, and this high over here has to be the end of something. So if we then think about the scenario, then this can be a W. This then has to be some sort of a wave X, which looks really weird to be honest. And then we have an A, B, C to the downside for a wave Y. So then we have a W, X, Y. Now, in this particular scenario, if we are going to get, and actually let me put this on the chart as well. So we then have, oh, I'm putting dots on the chart. So we then have a W over here, thinking of X, and then eventually a wave Y, where this wave Y is then a zigzag structure, right? That's what we're looking for. Now, this is a bit awkward, right? Because if this is going to be then a wave Y in a zigzag structure, it's probably going to be quite likely we're going to take these lows over here. And if price would move to the downside and take this low, and then after this wave Y, because if this is a corrective WXY structure, we expect more upside when Y is finished again, right? So because we have this then to be a three-wave structure as well, this has to be a W. So this might be a bit complex now, but I'm trying to explain some deep knowledge stuff. So we have a WXY over here, because this is really how it goes. I'm literally showing you how it goes. If you see an impulse, is it a C, A, or 1? This is literally me doing it live. So I did not prepare this per se. I just wanted to debunk C, A, or 1. So in this particular scenario, if this is a wave A, we expect a three-wave structure, meaning this has to be some sort of a WXY three-wave structure. But that also means that this then has to be a three-wave move, followed by a three-wave correction in a wave X, and then we expect another three-wave move in a wave Y. Now, if this then is a WXY, then we also expect the other scenario I have over here, which then is basically price potentially going for an expanding flat idea, with this over here being a three-wave structure. So we have a three-wave structure over here, then we have a three-wave structure over here for a wave B, and then eventually a move to the downside in a wave C. So in this particular scenario, we expect basically some sort of a WXY in blue to finish the green B, ending somewhere most commonly between the 1.236 and the 1.38, which also includes the 2022 range highs, for maybe a liquidity grab and a move to the downside, right? So this is, if this is a wave A, then this is a scenario that I have on the cards where we would somewhere bounce below wave A potentially for then a move to the upside, where this scenario of wave B is becoming a lot more likely. Okay, so that being said, we now covered the scenario of a potential wave A. So now finally, let's look at this structure being a potential wave 1. If this is going to be a wave 1, we expect a lot more downside to come, right? Because then this is a wave 1, then we have a wave 2, then we have a 3, 4, 5, and an impulsive, big impulse to the downside. Now, if this is a wave 1, it means that the high over here has to be the end of a complete corrective structure. So this can still be an impulse to the downside, right? A wave A. I'm going to show you the scenario in a second. So this is a 5-wave structure. Then this has to be some sort of a 3-wave structure, which is finished. for then a continuation to the downside in an impulsive structure, which then is over here, the start being a wave 1. So in this case, we think about this scenario over here. So this scenario basically says we have a 5-wave structure in a wave A or 1, followed by some sort of a corrective structure in a B or 2, before then continuation to the downside in either a wave C or a wave 3. Now a wave C, well, if this is the wave 1 of a wave C, we're going to get probably a very long wave C, but it might be more likely we're going to get a deeper impulse to the downside. However, nonetheless, this is going to be an impulse to the downside for much lower targets than the other scenarios mentioned. So in this scenario, the correction is finished, more downside to come, and the invalidation is basically if price would go to the upside and takes this high. The moment price is taking this high, this scenario is invalidated, and also this cannot be a wave 1 anymore. So this is basically how, based on an impulsive structure, you can try to think about scenarios on the higher time frames. And this is literally me doing it live. The only thing I prepared is saying C, A, or 1. And then all the other scenarios I didn't prepare. I have to put them on my chart, and I hope you learn something based on the impulsive structure that we have over here. Now, of course, I mentioned my preferred, so let's go at least a little bit in detail into my scenarios over here on the medium time frame after we spoke about this downward structure. So currently, as it stands still, my preferred scenario is that this is a 5-wave move to the downside, then follow up by a 3-wave structure in a wave B, looking for eventually a C to the downside. In this particular scenario, we then have a W, X, and an expanding flat as explained, and then a wave Y over here to finish the blue B. You see the 2.618 that I have on my chart right inside this confluence area that we have, for then eventually potentially a move to the upside where the trading setup over here can be activated as well. Now the safer option for this trading setup, because you always have a risky and safe option of course, a risky option is price moves to the downside, you just enter for whatever reason, stop loss below the low, invalidation, and then eventually move to the upside. Of course, you have to follow your plan, your strategy. No financial advice. This is purely educational. But a more safer option is to wait what price is going to do in this area over here. Be patient, be disciplined, follow your own plan and strategy. Maybe look for a bit of a support or a structure to the upside that proves to you, for whatever your plan is, that we have some support. Maybe a bit of a move to the downside, some bullish divergences on the CVD for then a potential entry to the upside. Like that could be interesting, but first of course price has to move to the downside, after which then a target to the upside is going to be the double top that we have over here at 30k, another double top at 30.5k, the potential 1-to-1 that we have as well of this wave A for then another wave C, the 1-to-1 trend-based fib extension. And we have my target box between 30.2k and 30.4k, which is still untouched. And I would love price to hit my target box over here as well. Now, once price moves to the upside, the potential short scenario is basically the same as the long, but the other way around. So waiting for price to hit this area. Again, risky is just entering, stop loss above, clear invalidation for a move down. More safer is to see a bit of support and whatever you like to see for your plan. Maybe some divergences, RSI, stochastic, CVD, whatever it is that fits your plan for then a move to the downside, right? So this is currently still my preferred scenario. I would really enjoy another move to the downside personally, but of course if price moves up, we currently do not have any bullish CVD divergences locally here on the 15-minute. Well, that's absolutely fine, right? I might miss this setup over here, or you know, as far as it stands now, this price action is not fitting my personal developed trading strategy, which is not Elliott Waves per se, because I have a more complex entry strategy, and at the moment nothing's up, like I'm not in any position, so that's fine, and I might miss this move, absolutely fine. I have no FOMO. And then eventually looking for a down trade. Now, this scenario, the alternative, as mentioned, looking for this move up where the trading scenario is to enter over here, stop loss above the 1.618, which is a rare target for then a move to the downside. It's a rare target, by the way, for a wave B, so that's why the stop loss is above. Looking for a move to the downside and then a wave C. And this scenario, as explained already, we expect price to not go above here anymore. There's not really a trading setup, because then the trading setup was going to be this high for a bigger move down. And then we expect a wave C or then a 345. Now the wave C target area is over here between the 1 and the 1.236. I do want to show you it is just above an important target box that I have, which currently sits between 24,850 and 24.3k. So I personally would like it that if price is going to take these lows and not bounce up immediately, but continue to the downside, we at least go to the yellow target box that I have over here for some support. So a longer video, actually also a very detailed video, but I hope you enjoyed it. I hope, again, this video was helpful or valuable to you as well. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.